If you were born poor, it's not your mistake. But if you die poor, it's your mistake. People become poor in old age because, in their youth, they fail to appreciate the power of saving and investing. The best remedy is to seize every chance for financial growth, even later in life, by saving and investing wisely. Rich people avoid two things in life: stupid company and stupid spending. The fastest way to double your money is to fold them in half and put them in your pocket. Rather go to bed without dinner than to rise in debt. It takes 20 years to build a reputation and 5 minutes to ruin it. If you think about that, you'll do things differently. Money is not everything. Make sure you earn a lot before speaking such nonsense. If you don't find a way to make money while you sleep, you will work until you die. I will tell you how to become rich. Close the doors. Be fearful when others are greedy. Be greedy when others are fearful. Never depend on a single income. Make investment to create a second source. The stock market really isn't a gamble, as long as you pick good companies that you think will do well, and not just because of the stock price. In the short run, the market is a voting machine. In the long run, it is a weighing machine. Do not save what is left after spending. Instead, spend what is left after saving. The big money is not in the buying and the selling, but in the waiting. Rule number 1, never lose money. Rule number 2, never forget rule number 1. Never invest in a business you can't understand. A good business is not always a good purchase, although it's a good place to look for one. The stock market is a device for transferring money from the impatient to the patient. The 3 most important words in investing are margin of safety. Wall Street has too much wealth and political power. It's far better to buy a wonderful company at a fair price than a fair company at a wonderful price. If you aren't willing to own a stock for 10 years, don't even think about owning it for 10 minutes. I make no attempt to forecast the market. My efforts are devoted to finding undervalued securities. Only buy something that you'd be perfectly happy to hold if the market shut down for 10 years. Wide diversification is only required when investors do not understand what they are doing. All there is to investing is picking good stocks at good times and staying with them, as long as they remain good companies. Gains are won by players who focus on the playing field, not by those whose eyes are glued to the scoreboard. You don't need to be a rocket scientist. Investing is not a game where the guy with the 160 IQ beats the guy with 130 IQ. We don't have to be smarter than the rest. We have to be more disciplined than the rest. Risk comes from not knowing what you are doing. Investors should remember that excitement and expenses are their enemies. Only buy something that you'd be perfectly happy to hold if the market shuts down for 10 years. Price is what you pay. Value is what you get. One of the funny things about the stock market is that every time one person buys, another sells. And both think they are astute. The price of everything rises and falls from time to time and place to place. And with every such change the purchasing power of money changes so far as that thing goes. Do you know the only thing that gives me pleasure? It's to see my dividends coming in. The investor's chief problem, and even his worst enemy, is likely to be himself. Far more money has been lost by investors trying to anticipate corrections than lost in the corrections themselves. Only when the tide goes out do you discover who's been swimming naked. Never invest in any idea you can't illustrate with a crayon. The rate of interest acts as a link between income value and capital value. Long ago, Ben Graham taught me that price is what you pay, value is what you get. Whether we're talking about socks or stocks, I like buying quality merchandise when it is marked down. The most important quality for an investor is temperament, not intellect. You need a temperament that neither derives great pleasure from being with the crowd or against the crowd. Your net worth to the world is usually determined by what remains after your bad habits are subtracted from your good ones. It is usually people in the money business, finance, and international trade that are really rich. Diversification is a protection against ignorance. It makes very little sense for those who know what they are doing. Someone's sitting in the shade today because someone planted a tree a long time ago. Nobody buys a farm based on whether they think it's going to rain next year. They buy it because they think it's a good investment over 10 or 20 years. There seems to be some perverse human characteristic that likes to make easy things difficult. Speculation is most dangerous when it looks easiest. Arbitrage proof has since been widely used throughout finance and economics. Waiting helps you as an investor, and a lot of people just can't stand to wait. If you didn't get the deferred gratification gene, you've got to work very hard to overcome that. A market downturn doesn't bother us. It is an opportunity to increase our ownership of great companies with great management at good prices. You make most of your money in a bear market. You just don't realize it at the time. History provides a crucial insight regarding market crises. They are inevitable, painful, and ultimately surmountable. An exchange-traded fund is a pooled investment security that can be bought and sold like an individual stock. ETFs can be structured to track anything from the price of a commodity to a large and diverse collection of securities. The benefits of traditional ETFs: low cost, tax efficient, intraday liquidity, and transparent.